Greetings and good day. I hope you're doing great. I'm here with you for the daily Ethereum analysis on June 3rd. We saw that after a 23% fluctuation, last month's Ethereum candle ultimately closed with an 11% drop at the $2,007 range. In recent weeks, after the deep decline that occurred in February, we observed that the price was supported by buyers and had risen up to the weekly FPG range, around the $2,400 price level. However,
do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
We then saw that Ethereum faced selling pressure and has now reached its previous bottom range, around the price of $1,880. The price reaction to this range will be very important. By examining the daily time frame, we can see that after the price reacted to its daily FPG zone, it ultimately experienced a strong bearish candle yesterday, breaking below its previous low, and is now situated within the daily order block range. If the support in this range is also lost, the next expected range could be the price of $1,750. We are currently analyzing the inflow and outflow of liquidity from Ethereum ETF funds. As you can see, in recent weeks, there has consistently been an outflow and negative trend from these funds, and just in the first 2 days of this week, more than $133 million have been withdrawn from these funds. In line with this, we also see that the Fear and Greed Index remains in the fear zone and at its lowest level in the past month. We are currently analyzing the 4-hour time frame. At the beginning of the week, the price was fluctuating around its previous bottom, but after the news broke about the first sale of Bitcoin by the company Strategy in recent years, the crypto market faced a wave of negative volatility, and the price of Bitcoin, which had been above the $2,000 range, quickly moved downward. This downward movement continued until the 4-hour and daily order block area, and as previously mentioned, this area is currently the most important support zone for the price of Ethereum. In the past hour, we can see that after the price reacted to the 50% line of this zone, it is now forming a strong bullish candle. Now, during this move, the 4-hour FPG and internal liquidity were collected. We are currently analyzing Ethereum's liquidity map. During the recent downward movement, a significant amount of liquidity was collected, and now, as internal liquidity, we can consider the FPG low time frame zones. On the other hand, as liquidity above the price ranges of $1,915 and $1,930 are relevant. We are currently analyzing the 1-hour time frame. Given the risk aversion that has occurred in the crypto market, we can't expect this downward movement to end quickly and see the start of an upward trend right away. After reaching the higher time frame order block area, if there is more support, the price can remain within this range. However, for now, when it comes to entering trades, we will consider Ethereum's sentiment as negative and bearish. Therefore, if the price continues and collects the 4-hour FPG liquidity, we expect renewed selling pressure. And if we enter a trade, we can target the previous low as our objective. Wishing you success and profitable trades.
7 powerful volume trading indicators: footprint, volume profile, and fast scan. Level up your trading.